But let me take it across to Ashok then. Ashok, hi, morning. Your festive season has aided the growth clearly for you for the quarter. But was the LFL growth, and what is the expectation now from the wedding season?
We, of course, closed the quarter two with a very, very strong growth. And we also talked about that in the festive season, which started from the end of September to, say, end of October, on a like-to-like basis in jewelry segment, we saw close to 19% of the growth. And other categories also, watches has done well, about 17%, and Eyecare also 17%. As far as wedding is concerned, we expect quarter three to give us some positive result. For us, quarter one and quarter two didn't see lot of traction. It was almost at a similar proportion which used to be. But in quarter three, we believe with the November and December month still ahead of us, we believe that we can see some positive traction on weddings. But on like-to-like basis, it is very difficult to say that we should just extrapolate what we have seen in the festive season.
Right. Tell us a little bit about the demand trends, especially in watches and the eyewear segment, because you did mention that it fizzled off in the month of September. What's the demand like currently?
So Eyecare being a need category, we did see some tapering off in September month. Sometimes, even when people are out celebrating and in festive mood, need category takes a back seat. And also the rains affect, sometimes some of these categories. Weekends, if it's raining and it's a need-based and you really are not in an urgent requirement, then you defer those things. What we have seen during festive season, particularly last 10-15 days, Eyecare category again coming back with a good demand. Now we again believe that while looking at just quarter, we should not be thinking about immediate conclusion on anything. This is a huge opportunity, need-based category. India has a big market, a lot of underserved consumers are there. So we still see a big opportunity, and that is where we continue to expand, our target of 1,000 stores by the end of FY23. We are on track and we are not slowing down on that.
Mentioned trends are coming back to where we looked at when we look at the studded price versus pre-COVID. Why is that so? And is it only attributable to gold prices?
So studded has done actually pretty well for us in this quarter. If you have seen our numbers, YOY growth on studded was 25 or 26%, and high value studded has particularly done very well. Quarter two of last year, the gold price movements were very sudden. Pre-pandemic quarter two, I'm talking about, that is FY20. Gold price movement was very sudden, and that is why mix of studded in that quarter at 37-38% is slightly, I would say, not normal. Quarter two is generally a high studded quarter. We delivered about 32% in this quarter studded here. We are seeing it inching up, but 37% in a short term is a wrong reference point because of certain peculiarity of that quarter.
And when we look at the jewelry segment EBITDA margin, historically it's been around 12%. Now Q1 and Q2 it's been at 15%. Is this sustainable?
No, we are guiding that midterm 12 to 13% is the right level. There has been a one-off kind of which cannot sustain 200 basis point benefit in this quarter too. At this point of time, our priority remains growth, customer acquisitions, expansion, and that is where we say with the stable margin band of 12 to 13%, we will deliver industry leading growth.
Good morning, Mr. Sonthalia. What we've also seen after a few years is a strong comeback by the eyewear segment and the turnaround story. There's a better margin profile as well. So are you going to focus on that, or will now the focus be on growing this segment?
Yes, I think now Eyecare has sorted out their cost structure, back-end channel structure, etc. And we have been eyeing a mid-teen sustainable margin, operating margin coming out of this business. And now the focus has completely shifted onto the growth, and where the network expansion, marketing, branding. We recently also kind of extended our fast track youth brand to the eye care segment, and we are running some pilot stores on that model. And if they are successful, then huge scale up you can see there also. So you are right, the growth is the focus at this point of time for eye care segment.
Previously, Titan has highlighted that the traction is really in the bigger ticket size. Is that still the case? Is that still the focus area? What about the rising competition for the low ticket products?
So it is not only jewelry, across categories. What we are seeing that mid market and premium segments are doing well compared to mass market offerings. And that's, I think, have something to do with macro environment where inflation and interest rates are hurting perhaps most to the bottom of the pyramid, where their discretionary expenditure budget was in any case low, which has further shrunk. But mid-market or premium segment seems to be unaffected because of that, and they continue to spend, which is reflected in jewelry also. We are seeing high value studded doing well, high value gold ornaments in jewelry are doing well. I would not say stress in the entry level, but the growth compared to premium segment and high value segment, definitely entry segment is slightly seeing lower growth. The same thing we are seeing in watch category also, where our Sonata brand, which is mass market brand, is seeing lower growth compared to what Titan and Helios and others are doing.
Now, the international business has seen a strong growth, and you said that you are expected to generate close to 2,500 crores over the next 5 years. So what's the growth strategy, and which are the markets that you're looking to foray in other than the US and the GCC markets?
So I think our strategy to start with is focused around global Indians, and we are looking at those clusters where some of these very, very successful global Indians are there. And that is how we started with GCC. And the next geography for us is the US. In GCC, already 5 stores in Dubai is working and working very well, sometimes beyond our expectation. It is the time which take into network expansion. But once the store is open, we find the footfalls are happening, and not only the Indians, but other local communities and local nationalities are also getting attracted. So, of course, one is that, open more stores in some of these chosen geographies, and then build a very, very strong e-commerce layer on top of that, so that once our inventory is there in those geographies, serving e-com customer also becomes very, very easy and convenient. So already 5 stores, another 2, 3 definitely coming in this year. As a next country in GCC, we are looking at Qatar, maybe then Oman, and US, we are looking at New Jersey, then Texas, Chicago, and West Coast. That's the order, But over next 2, 3 years, to my mind, 10, 12 stores in US and about 20 stores in GCC, and a good e-com layer on top of that. And that we believe 2,500 crore we can achieve even earlier than what we have done.
So what is it that you're targeting for the full year in terms of Tanishq when it comes to the store expansion number?
So, the numbers for Tanishq is 35 stores maybe this year. We have already done 13, 14 stores. Mia is very aggressive. They are doing some 50, 60 stores. Carrot Lane is doing similar number. Zoya, after a long, I would say, wait, are going to add 1 or 2 stores. But what really is not visible to everyone is also that the expansion of the existing stores. There are many stores which are adding retail space and expanding, and almost equal to adding one store. So if you add all those things, I think it's pretty ambitious and pretty significant, and that shows also that consumer continue to have a lot of confidence. We are winning market share, we are attracting new customers, and we will support, which will support our expansion plan very well.
And how's the recovery been in the tier 2 to 3 cities and rural as well as small towns? Are they spending as much as metro cities?
During COVID time, we saw metro got impacted more than the tier 2, tier 3, and tier 2, tier 3 were doing well, and metro were slightly down. Right now, trend is slightly reversed, where metros are doing well distinctively compared to tier 2, tier 3 town. And I think this is very related to the constraints which COVID put more on metro city. But over a long term, if you look at say 3-year, 4-year kind of horizon, all the sectors are doing well, metro cities are doing well, and actually tier 2, tier 3, tier 4 are doing slightly better over a long-term basis.
Okay, Ashok Sonthalia, great to have you on the show. Thank you so much for taking the time out and speaking with us today on ET Now and highlighting